Good morning. What's up, guys? We are live. Hope you're all having a good Monday morning here so far. Let's get right into it. Market is moving. Things are shaking. We're up about 1.5% here so far this morning. So I, personally, am looking for a couple of things. I'm looking to see, hey, if this sustains, and this bottom of your screen, that daily chart, all of a sudden it's like, hold on now. We're looking at a potential trend market compared to the range market we've had the last 2 months. It's been a while that we've been in a range. But when the market starts trending hard, day after day after day, I don't care which direction, by the way, then all of a sudden I start making different decisions based on the setup at hand. Right now, looking at this happens to be a 5-minute chart. I'm looking to see, hey, is there a place that makes sense to get long for a little bit of continuation, though understanding that 1.5%, 1.45% on the day out of the Nasdaq here so far, it's a relatively big move compared to what we've been seeing as of late. So if we end up getting a couple, maybe 2 or 3 consecutive bear bars closing near the low, then I'll look to fade the move, get a little bit short. Good morning, guys. How we doing? Tony, Futures Profit. What's up, guys? Mitz, Javaz, Pat, Nia, TL. Good morning. How we doing, guys? Higher high. Welcome back. Good to see you. Yeah, it's been a little while. Good to have you back. Dominic, good morning. Brandon, how we doing? Eric, good to see you. Lee, good Monday morning, brother. Oh no, Marshall, what's up, guys? Michael, got my payout this morning. Happy Monday. It's always a good feeling. Michael, what firm was that from? Was that Apex? Take Profit? What was that with? We have 50 seconds left, by the way, on this 5-minute bar, and we're seeing a strong little bounce back here out of the bulls. I hesitate to call it little. Gaines, your boy got funded, 25K account. Now I'm wondering, should I do another eval while running my funded account? Yeah, you know, Gaines, what I would do, if I were you, I would trade the one funded account in the window that you perform best, which is probably going to be the first half of the day, though that's not always true. For example, a couple of weeks ago, I was actually trading like okay in the morning and really well in the afternoon. Most of the time, though, that's not the truth. Most of the time, I'll do better in the morning and all right in the afternoon. So that's what I would do. I would trade the funded in the window you do best, and then trade the eval more aggressively so you can shift your mindset in the other window. Trading both, you know, I don't know. You can, I mean, trade funded and evals at the same time. It can make sense to do so, but the one problem you can run into mentality-wise is that you start putting on more risk than you normally would because you're trying to get the eval funded, and that messes with the funded account. Dominic, which contract will you be using? I'm going to roll over here today. So I'm hitting the September. Carlos, welcome. Good to have you, brother. Brandon, passed my first 2 evals on Friday. Today's my first day trading funded. Yeah, it's exciting. Stay small. Stay small. You know, a lot of people, on first day funded, they trade 5 minis, 10 minis. Take it easy. Just try to get a green down to your belt, and you know, the payouts will 8 days, 10 days. It's right around the corner. It's not a big deal. Just take your time, and the payout will be here before you know it. What's up, Taz? How we doing? Max says, Nico, I was trading with a quote-unquote friend for almost 4 years. He stole 75K from me. I recently found you, and you were a blessing. Oh, no, we're going to keep trading live, Max. I'm sorry to hear that. Man, it's baffling how many stories there are of friends, business partners just screwing the other side. It's too bad. Tone, good morning. All right, guys, so when I look at this chart, again, I've been watching this all morning. When we see this occur, I start to think, okay, lately what we've been seeing is these tight trends upside or downside, for example, a tight trend in general, one way or the other. And it's tight, meaning it's not like a big channel where we're bouncing, it's just a tight move. Now on the 2-minute, it looks a little bit more like a channel, but even then it's still a pretty strong move upside. But on the 5-minute especially, I mean, you look here, this has been happening a lot, and nearly every time what we've been getting after this is a trading range sideways for a little while, and then from there, it's 50-50 whether we break downside or get a second leg higher. But now that we're getting a bigger bear bar, yeah, you get a big bull bar, but now, you know, we're 3 minutes into this next 5-minute bar and we're still struggling to keep it green. It wouldn't surprise me if we do see a bit of a sideways trading range here, though if we do see a breakout upside, I'm not against getting long. But it would really need to be clean. Because of trading range here, a little bit of sideways action for the next, 15, 20 minutes, 45 minutes. wouldn't surprise me if we saw that. Patel took a sell on Friday, got 70 points. It's a hell of a trade. Good work. So, I'm always curious. For most traders, and I've looked at a lot of data working with traders, and what I tend to see, I'm curious how you guys approach this. What I tend to see is almost everybody eases in, and they don't even realize they're doing it, but when you look at their P&L by day of the week, everybody seems to ease in on Monday. Tuesday, Wednesday, Thursday are their best performing days, and the Friday everyone kind of eases out. Do you guys approach it that way? I think naturally it ends up kind of happening that way. Like Friday, again, we talked about this on the video that I uploaded on Friday. Fridays, a lot of people, they'll get green. By the way, this isn't wrong. We're just talking like what's optimal. But a lot of people, they'll get green on Friday and kind of call it a week. And that's okay if you want to do that. But just understand, if you're trying to make the most money possible, that is not necessarily the right call if you still have edge, right? But it can be the right call to protect your psychology. But do you guys ease in on Mondays? Like, do you trade full size? Do you just eat, or do you just jump right in? I kind of tend to just jump right in. The thing that I've struggled with more so in the past is like Friday. I'm not really one to ease in on Monday necessarily. I just don't really feel the need. But on Fridays, you get green. You're green 10, 11 a.m., noon. It's really easy. This is why we had this conversation in the video. It's really easy to just be like, yeah, I'm just going to call it a week. Mario, good morning. How we doing? So you can see we're getting some shrinking bull bodies. Yeah, I mean, I think we're probably going to see a trading range. If we see a big surprise bull bar, again, I would not be against getting long. 22,000, by the way, is kind of out of the way, at least by a couple hundred points for now. However, when we look at this here, bottom of your screen, we're not really out of the woods as far as like flat tops, right? This here is kind of a brutal flat top, right around 22.2. It's always going to be a range, right? A couple hundred points. When you're looking at the daily, it's never going to be like, hey, 22,250 is the level. Nah, it's always at least I'd say 50 to 100 points minimum as far as the level, because everyone's going to draw it a little bit differently, and people are looking at different hours on futures. That's another thing to consider. It's not necessarily just New York. Joe, Nico, took your advice, scaled horizontally up to 8 accounts. Awesome. Good progress. Trading small, all copy traded. Small profits times 8 is bigger profits, lower risk. Yeah, lower risk per account. I don't know. I think it only makes sense. I mean, the whole scale vertically, scale horizontally is a thing that, like, that verbiage is kind of stolen from, well, stolen's the wrong word if you take it literally. That's kind of like an advertising verbiage, right? For campaigns and stuff. But for prop trading, it applies perfectly. Scaling it vertically, man, is asking for trouble, I think. Now, if it works for you, you know what? Fine. I just think that scaling vertically is the obvious decision. The one hesitation with scaling horizontally is you have to trust your copy trader. If you don't, you're going to have issues. If you have a copy trader that, you know, glitches pretty consistently, scaling horizontally is going to be a huge headache. But if you trust your copy trader within reason, and, you know, as you get to more and more accounts, I think the number for me is probably going to be like 40, 50. Then I think I'll start trading them in 2 groups to protect myself in case we have a copy trader glitch. Because I've had that happen before, but not with this copier. It was with a different one. So, I mean, you see these bear bars starting to set in. Still kind of strong here out of the bulls, but, you know, you get, this is so common. You get a really, really strong move, trading range. More or less sideways channel, at least for a little while. We'll see if that happens here. Again, I'm not against getting long if we continue to see strong pushes. I'm just thinking out loud. Happens a lot on the 2-minute, by the way. You can get more context here. You get kind of strong leg after leg after leg, and then all of a sudden the bull bars start to be a little bit weaker. You start to see a little bit more wicks on smaller bodies. Tony, I received a compliance email from Apex. Do they send that to everyone with a funded account, or is it possible I broke one of their rules? Yeah, I mean, it could be any reason why they sent that to you. Maybe they quickly reviewed your trading and thought maybe, hey, you're trading too big. Maybe they just want to see how you're doing things. Maybe they don't necessarily understand. No, it doesn't mean that you broke one of their rules necessarily. It could mean that, but it doesn't necessarily have to mean that at all. Look, Apex is just sending out these compliance emails to try to protect their downside. I mean, they've been losing millions a month, not net, but they've been losing millions a month to people who are kind of gaming the system. And I don't know if this email went out to everybody or just affiliates, but they laid it out, and I can tell you guys what happened. They were losing millions of dollars a month. Again, not net. Apex makes a lot of money. But to people gaming the system in the way like people would essentially gamble on evals, like pin it against each other, like take 2 accounts, one long, one short, pass one, fail the other, go to a funded account, and they don't care so much about that kind of thing. I mean, obviously they want you to trade the eval well, but their bigger concern is people then get to funded, and they basically trade like 10 minis, 5 to 10 minis, and just try to get payouts. And they're trading so big that their blow rate is incredibly high, but they don't care because that's the trader's business model. They just blow through funded accounts, take like 1 payout per account if they're lucky, and just try to make as much as they can as quick as they can. That's not really trading, and they've been losing a lot of money to people doing that, and that's not really the point of prop firms. So they're just trying to crack down on that. If you're not someone who's doing that kind of thing, you have nothing to worry about. Bigfoot, good to see you. Good morning. So, you know, I gotta tell you, this is one of those moves where you look at it and it's really, really tempting. I get it. In the early days, I would do this too. It's really tempting to get short without good confirmation. One of the best decisions I think you can make to improve your trading like now is if you see a move like this in either direction, unless you see really, really clear confirmation. Now, everyone says that, no one explains what it means. For me, clear confirmation is like 3 bear bars, growing bodies, all 3 closing very close to or at their lows. So you get like a bear bar closing near its low, second bear bar growing, closing near its low, third bear bar growing, closing near its low, and it's like below the 5 EMA. It's like, okay, clearly the bears have taken control in the last, 15 minutes if you're on a 5-minute chart. That's when I would think about getting short in a move like this. However, a really big thing you can do to improve your trading and stop taking on a ton of heat and it feels like everything's against you is when there's a move like this, clearly the bulls are in control, don't fight it. Okay, just wait for a place where it makes sense to get long. You can take that trade, but it has to make sense when you enter, right? So you guys know, maybe you could buy in this trend. You could have even bought below here. You could buy, a point, 2 points, a tick, whatever below this bar. Whereas in a lot of cases, this would be a sell. If it was like a range day, this is clearly more of a trend this morning. So that's what I mean. Market context is everything. Because in a lot of cases, you'd sell the rollover of this bear bar. In a case like this, if you were going to make any trade here, you'd be buying below this bull bar, which would be a buy on this bar. All right, you could buy, at bull bars closing near their highs, though we're not really getting that. We're getting a lot of wick backs, which I'd be avoiding. But also we gotta understand, right? We might see a sideways channel, and that's okay, because we get these pushes up. A lot of times it just goes sideways, or the move softens out. It still goes higher, just more slowly. The old saying is like the trend is your friend, right? I don't like that saying. I think it lacks context. But in a way, if you really understand the context of the market, like, okay, we're in a range market as of late, right? Like, look at the bottom. This is the daily chart. We're in a range market. Like, every breakout has failed, right? Essentially. So, the trend is your friend. Should I go bet on a 1,000-point move here today? Probably not. But if I was going to scalp here, I don't want to just sell a high. I would rather just get long, buy high, sell higher mentality, and then see how it develops. And if you get stopped out along the way, it's like, all right, well, either something changed or we caught a bit of a pullback, whatever, move on. Yeah, the trend is your friend thing has gotten abused by people taking it out of context. You see a move like this, everyone's like, all right, I'm just gonna get long and hold until 24,000. It's like, that's a really big ask to make out of this market. It's a range market. However, in a scalping context, it applies. Probability-wise, right? We're talking 60-40, maybe 70-30 in some cases. James, good morning. Tone, okay, he's asking the important questions. How do you usually determine a trend day versus a range day? Trying to do better on this myself. So, first of all, as traders, something that took me a little while to understand, because it always felt like everyone just, they know exactly what's happening. Because that's how, you speak when you're trying to explain something. No, as traders, all of us live in like a permanent 60-40 world. There's never, listen, if there was a scenario where it's like This is a 98% probability trade at a 1-to-1 reward to risk. You're lying to yourself or you don't understand the math, because how would a market exist if that was true? You have to have buyers and sellers. Futures are very simple. Do you want to buy or do you want to sell? The market's efficient, right? It always tries to balance out both. So if you actually think that a 1-to-1 reward to risk trade or a 2-to-1 reward to risk trade has a 95+% probability of working, you are wrong. And bring yourself back down to earth and understand the best you're ever going to get is 60-40, in some cases 70-30, tops. That's the best you're going to get. So when we're looking at this, we're always trying to kind of like make our best assessment, but we're never really sure, right? You can't be sure as a trader because you get paid to put on risk when you're unsure, but you have a good idea that the probability is in your favor. And then you manage the trade accordingly. So what I do is I look at this and I say, okay, if I look back to the opening bar, what kind of orders have been performing the best? Well, you know, you could be buying on stops above bars, but it's not so strong that like stop orders are the best here, have been the best. What's been the best is limit order buys on little pullbacks, like lows of bars, below lows of bars. We've only really had a couple of scenarios that's happened here so far though today, but those have been by far performing best. Have stop order bears, meaning they're selling using a stop order below bars, been doing well? No, they've been getting stopped all day. That hasn't worked hardly even once. Have limit order bears been making any money? Well, I mean, if you top ticket, but like, it's a really hard way to make a living here. I'd rather just make my life a little bit easier. And when it's so biased like that, like the orders that have been working the best are both on the one side, the bullish side. I mean, you can see it. It's clearly more of a trend move here, but you have to compare that with the context of what we've been seeing on the daily, and we're in a range market. So we have a trend morning inside of a range market, so you have to be a little bit skeptical, which again, I think is why the stop order bulls, meaning, you know, here. You do this, right? And I would set a stop here, and if it hits it, then it buys. That's like a stop entry. Same thing on the sell side, but below, right? So I could do this. If I place it there, it'll sell if it hits it, right? So those are helpful in more strong markets when you don't, if you're trying to buy a rollover, you don't think you're going to get a pullback and you won't get a fill on a limit order. That's when I would use a stop to enter. So don't just look at the chart. You have to, I think you need to think about it that way. Like, who's been doing well so far today? You compare that with the chart, and then you compare that with the daily context, and you get an answer. Don't try to make a living trading doing the hardest thing. It's just not worth it. I tried that for so long. Okay, I'll just, I'll sell the top and it'll happen to curl. This is going to be the time where it curls. It's probably not going to be. The probability says it is probably not going to be. Doesn't matter how smart you are, doesn't matter who you are. Don't try to outsmart a very efficient market with the smartest people, some of the smartest people in the world driving the movement or programming the algorithms that drive the movement. You can't outsmart it, even if you're incredibly intelligent. So, I hesitate to use this phrase because I think it gets taken out of context, but I like this phrase. Take what we call the easy money trades. The easy money trades pay your bills. Okay, the easy money trades grow you. They let you scale. The easy money trade here is not wait for a pop and short it. No. You're going to get run over. The quote-unquote easy money trade, which, by the way, you can still lose on plenty of times, and you will, it's just the easier way, quote-unquote, to get a little bit of edge. That will pay you over 100,000 trade sample size. The quote-unquote easy money trade here is to find a place that makes sense to maybe get long and get long. If it doesn't work, it doesn't work. Move on. Don't be so emotional about it. It's a trade. Who cares? Move on. If you have edge, you know you did the right thing. Or if you can reasonably say and look at your trade and be like, I think that trade had edge. You did the right thing. If it didn't work, you just happened to flip the weighted coin on the wrong side. Dominic, they just want to get volume over to the new contract as quick as they can. It's in all of our best interest to do that. Yeah, three clean bars. Everything I say forever, guys, the key word is context. If you're ever looking at a market and you're like, oh man, I don't know, just think context. Does this make sense? Am I doing something that I can stand by even if it loses? And if the answer is yes, take the trade. And if you lose, it's okay. You happen to flip the weighted coin on the wrong side. It's okay. You want to do this for a living, man. You gotta make your life as easy as you can. Otherwise, you're not going to want to show up. It's just going to be too stressful when you're doing things that don't make sense. Like trying to short highs on a move like this. It's just too hard to... It's just too hard. It's too hard to get right. And all it's going to do is frustrate you, cause you to go on tilt, trigger you to do things that are stupid. Don't do that. Just try to do the thing that you can stand by, and if you lose, you're like, wow, that's crazy that just happened. And you don't... It's okay. Because you're like, wow, I just happened to, you know, catch the wrong side. That's all right. But I'd take it again. That's the mentality you need to have to sustain yourself and do this long term for a living. When I'm watching here, you see we're getting more and more bear bars mixed in a little more frequently, losing a little bit of steam, still grinding higher. Bull bars are shrinking. The bodies are getting a little bit smaller on average, which is normal, by the way. ATR is starting to fade a little bit. That last bar had an 11-point range. Kings, Gordon, Nico, do you value point of controls, I assume you're saying? And VAH, Vans? Buzzwords. Buzzwords. I value price action. All of this stuff, by the way, all these buzzwords that you guys hear and these coined phrases and this and that, it all is just stemmed from price action. It's given a name to try to make you understand what's real, which is the price action. I think you should just skip that stone and go right to the source. Price action. If you can read price action, you can understand every little buzzword that anyone throws out there within 5 minutes of studying it. Don't study the buzzword, just study the source, study the price action, and you can understand it all. You a fan of Al Brooks for price action? I haven't read any of his books or anything, but I know what he's about, and he is an OG for sure in the futures world, and he knows what's up. I like him a lot. He's cool. All right, so you see here, I mean, more and more and more bear bars. The 2-minute really shows this. Starting to mix in a little bit more. Getting much more of a buy-sell mix. When this starts to happen, what happens to probability? It starts to fade. John, stupid question? No, it's not a stupid question. This is a complicated world. There is no such thing in my head about this. Stupid question, but what's the deal with new contracts? Well, with futures, there has to kind of be like an expiration for it to trade based on. For the opinion to kind of trade based on, right? The opinion of price. So eventually when that comes, you have to roll it over to a new date. But, you know, it doesn't really like mean anything because none of us are, you know, if we were trading like, okay, there's an old, from like the trading floors of Chicago, I'm sorry, the trading pits of Chicago in like the 80s. There's an old like funny, almost like myth, like lore from the trading pit where, you know, if you accidentally hold a contract too long and let's say you're trading, I don't know, soybeans, that the next day after expiration, they'll dump however many units of soybeans on your front lawn. No, not really. And especially because we're trading the Nasdaq, you just roll it over. It's the same thing. It just extends the date, gives you a new date for the opinion to kind of quote unquote end on. That's about it. It's not a big deal. People hype up the rollover so much. Like, what's the secret to like what day do you roll over? Just roll over when the volume's good enough to roll over. It's fine. You don't need to worry about it unless you're trading, you know, 5,000 contracts. It's just not a big deal. Okay, ATR is sitting at about 28, which is actually fine for this time of day. Just move, there we go, that'll be nice. A little algo pop there. See if that expands this little sideways movement a little bit. Joke's on them, I wanted 271 pallets of soybeans for my bulk. Okay, so you can kind of clearly see now, you know, we're very obviously entering what seems to be a trading range, at least compared to the previous move. So, At this point, until something changes, I now have to enter the mentality, more of a scalp mentality. I'm not really looking to swing unless we get a second leg higher or if we get a continuation sequence that gives me enough confidence to fade this move, which again would be at least 2, probably more like 3 consecutive bear bars closing near the low for me to fade this move. And I'd probably want it below the 20 EMA here on the 5-minute, which is just that single line there, the blue line. But again, lately what we've been seeing, and most of the time, is when you get a big push like that, it doesn't necessarily, we saw this last week happen once, but it's just not so common. You get a big push, most of the time it's not just going to see a giant fade instantly. Usually it enters a trading range for a little while, and then it makes a break. And oftentimes, if the trading range is defined enough, you can scalp it, but it has to be defined enough. All right, well, while this defines itself, I'll tell you what, I'll be back in a couple of minutes. Don't go anywhere. Back soon. All right, we are back. And I'm watching this bar. We do have 65 seconds left on this 5-minute bar. Now, something I'm thinking about here is, it looks like 3 consecutive bear bars, but they're small bodies, and we're coming kind of right into that 5-minute 20 EMA. So let me think about this. Yeah, you can see the bulls are wicking this back up. Now, I gotta tell you, had we seen more of a close down here below these wicks, I was very interested in buying that rollover. Kind of mix it up on them. I think a lot of people would look at that and call it a sell. I wouldn't see that as a sell. I'd have to see that as a buy. Stop place below this curl here. This bar shakes things up a little bit now, though. I really think we're gonna probably enter a trading range, or I mean, we already really have. Keep this a trading range, and then at some point make a break. That makes the most sense to me right now. Now remember here, you know, we do have the G7 summit pretty much all day, kind of starting more so at like 11 Central, that's noon Eastern. So it's about an hour out. So keep that in mind here. I'm curious to see if we start getting headlines out of there that start moving things. But that doesn't really officially start for another hour. Jay, what's up, brother? How we doing? Vinny, I trade both. You know, there's no singular answer. Lately, the reason for dropping to the 5, well, I mean, you look up top. I've always had both. This here's the 5. This here's the 2. Which one I execute on just changes based on, hey, if market volatility is really, really high and we're in, let's say, more of a range market, you know, maybe I'll shift to the 2 because we can get more executions on it in a high volatility market. Lately, though, the volatility's been pretty low on average. Like you look here at the daily, it's just been pretty small bodies and in a range. So what we end up seeing when you have lower volatility and a range market, the 2 minute starts to get kind of wicky. It's actually not so bad here today, but it's been much worse the last month, I'd say, as far as wicks, and it's just hard to get a read on. A little bit harder, I think, than the 5. The quality of setups on the 5 minute is always going to be a little bit better when they come, but the quantity is also always going to be a little bit lower. Yeah, Bernard, see, this is an important question that a lot of you guys probably have already dealt with, and some of you haven't, you know, well, I guess if you're doing it full time yet, and some of you guys probably haven't even thought of this yet, but this is kind of this is really a thing. He says, a question, what do you say when people ask, what is your job? I always just say finance to run from questions. Yeah, listen, so in my experience, I guess it maybe also depends on where you live. If you live in New York City, people might kind of get it. Maybe not, though. If somebody in public, someone who doesn't know you, just says like, hey, like, what do you do for a living? When you tell them you're a day trader, their eyes glaze over and they almost every time they don't know it, they don't get it. They don't know what to say. It feels kind of weird because it's almost like you have to understand 2020, 2021 kind of ruined that term to a lot of people. Because when you say, yeah, hey, I'm a day trader, a lot of people, what they think is, oh, so you're an unemployed like Robin Hood trader or something. I guess if they don't really like know you at all, that seems to be kind of the response that a lot of people seem to think, or they just don't really get it, so they don't know how to respond to that is a lot of the times also the case, I think. So I think when someone asks, what do you do for a living? In my experience, the best response is to be a little bit more specific, but not so specific that they really don't get it. So say, let's say you trade small cap stocks, just say, I trade small cap stocks. Or if you trade futures, just say, I'm a futures trader. And I think that narrows it down a little bit more where people are like, okay, I've heard of that. I kind of get that. But if you just say I'm a day trader, which technically is what we all kind of are, I think people kind of assume that you're like, that you don't really like know. Because again, you have to understand, when they all watched CNBC in 2020, 2021, the term day trader got soiled. So I don't know, man. It's whatever. Yeah, it's kind of unfortunate, Clinton, that the term day trader is cooked. I mean, technically, it's right. That's what we are. I don't know. It's just there's a stigma now. There's a stink around that term because I think there was so much coverage on the term day trader because everybody wanted to be a day trader in like 2020, 2021, and then the 2022 bear market hit. And a lot of people went through a lot of pain and they're like, it's all, day trading's a scam because I couldn't make it work. It's a scam. So there's this now, and I think you had a lot of people, and this is fine, it's not really their fault, but you had a lot of people in like 2021 who were like really into this before they maybe experienced the pain, and they were telling everyone I'm a day trader. But they kind of like, they weren't really, they were just kind of getting into it. And the coverage on the media is really what cooked the term to the average individual who like doesn't really understand it, because the coverage was so negative. It just painted retail in such a negative light for the sake of like rage bait and clicks. But you know what? Whatever. I mean, at the end of the day, like, what does it matter? Like, if you tell someone, hey, I'm a day trader, and that's what you are, and they look at you and their eyes glaze over and they're like, okay, and then they just move on. Does it really? Who cares? Does it really matter? But again, I find the best, least awkward response tends to come from getting a little bit more specific, but don't be so specific. They're not going to get what you're talking about. Just say, I trade small cap stocks, or say, I'm an options trader, or say, I trade futures. And they'll be like, okay, I kind of know what that means. That's cool. Yeah, exactly, Fob. I mean, this is the conclusion you'll eventually come to, everybody. It just doesn't matter. It doesn't matter. And if you make a good living from it, I mean, it's I don't know. They'll probably, like, understand that anyway. At the end of the day, who cares what they think regardless? So, clearly, little range here. I'm very interested in trading this range. However, it's relatively tight. We're talking less than 50 points, maybe 40, 45 points. Yeah, I mean, especially if you day trade futures, if someone asks what you do, you could say I'm a professional bank robber. That'd shake things up. Casey, just checking in. Did you get long yet? No. We're trading range. I'm not interested in getting long unless we get a clear second leg higher, in which case I would. And that would have to occur with a nice strong close above, I'd say, this wick. I believe this was that. Yeah, I think that, yeah, this was that algo wick that we saw. So this wick up top here was very short-lived. It was really, really quick. But I'm more inclined to believe that we're in a trading range right now, so I'm just waiting for small confirmation that I'll hit a little scalp. Lord of Fuse, 470 bucks away from passing my first eval. Take it slow. I like to size down into the finish line and just take the best trades you can, accept the outcome. Good work. That's the beauty of this, though, Vinny. It's the way we want it. Yeah, Taz, I mean, you know, you would think so for sure. The market, though, is really efficient, and it's really quick to price in whatever information is out there. And I think the longer you're at this, the more everyone starts to realize that news is 50-50, and trading on news is only worth it if it's like the primary driver of the market. It's like the opposite of a trickle down. How do I explain this? If you're trading like a small cap stock, the reason it just popped from $3 to $30 is because news just broke, which is the entire reason it's moving. And now everyone's speculating because no one knows what it's worth, because it's not an efficient market, which is why, by the way, you can get so much edge in small cap stocks, like pre-market especially. You can get so much edge. It's also risky if you don't know how to manage things and you're not quick. But in the futures market, it's very efficient. And efficient means, does everyone kind of agree what it's worth? That tones down volatility a little bit. When you get news, though, where people kind of disagree what it's worth, that's when you get like the 7% green days, the 7% red days, things like that. But news in general, I think it's really a dangerous game. And I've played this game before early on, and it doesn't, I promise you, it's a rabbit hole. It's a dangerous game, and it will not get you edge. To say, you know what, you're looking at this price action, right? It's clearly moving upside and now in a trading range. You're like, you know what? There's a lot of war news hitting today. They're going to touch on this today. I'm going to get short. Yeah, I mean, maybe you'll get lucky. Most of the time what'll happen is the market has already priced in everything and you'll just get run over. I only really pay attention to news if it's moving things right now. If it's clearly the driver for the volatility. If it's not, I try to put it out of my head. All right, this market's really slowing down. ATR is creeping down now to about 24. Range of these last 5 bars has been between about 25 and maybe 17. Actually 15 and 25 has been the range of the last 5-minute bar ranges. So again, I think we're in a trading range. So if we could get, it's kind of tight, man, but if we can get something that makes sense, I'll slap it on. And by the way, now that we're in more of a clear trading range, I'm more and more willing to get short. Unless we get a second leg higher. So in a situation like this, I mean, we have 2 minutes left on this 5-minute bar. Like, you know, it's so tempting to get long, like here. We're still inside of the range. And a lot of times what'll happen is the bears will step in. They'll say, this is a trading range. This isn't a second leg, and they'll short it back. But again, for me, this is very sensitive. If we saw a nice strong bull bar and we closed like up here, kind of like that, but we get an actual better close, not just a little algo pop and reversion, then all of a sudden I'm a little bit more interested in getting long, but understanding that I might be doing so at the top end of a range. So I wouldn't want to risk necessarily the whole... I wouldn't necessarily want to risk the whole range. That would be a bet on a breakout, which is kind of a tough bet to justify in a market like this, but if it makes sense, it makes sense. You guys can see, this is very much so. You're living in like a fog. You're trying to make sense of things you can never be sure on. If you just make a few more, good decisions than bad, in hindsight, of course, they can all be quote-unquote good decisions based on your plan when you make them. Just because they lose doesn't mean you made a bad decision necessarily. That's edge. That's all you need. Jay, this is the NQ futures contract. It's actually MNQ, the micro is what we're looking at. Nico, why did you switch to swing trading? I'm currently watching your 100K series and you said you prefer scalping. It was great to see you do it. I didn't switch. I do both. Lately, though, we just haven't had a lot of volatility. And, it's interesting because that sounds backwards. You would think when we have a lot of volatility, you'd be doing more scalping. Well, what we've been seeing lately, again, today's a little bit different now, but what we've been seeing lately is really, really tight bodies. And it's been a lot of big ranges, but the ranges have been like big, I don't know, maybe 100 points. Pushes upside, and then you pull back down. It's been big intraday ranges, not like tight little ranges intraday. It's been like, you would almost say a bull trend, bear trend, bull trend, bear trend, like big ranges that you get like, I don't know, 4, 5, 6 legs throughout the whole day. In hindsight, when you look at the charts, it looks like that. And that, for me, calls for more like, it's like the same setups as scalps, kinda, but they're more swing targets, swing stops, so I would call those swings, because on average they take a little bit longer. I love scalping. It just depends on the market. A big mistake I think a lot of, I'm not saying that anyone's a beginner here, but I'm just saying a big mistake that a lot of beginners make is, like, if you see me make a change, you think I'm doing it for like a big reason. No, I'm doing it because the market context, you have to make changes. That's why you can't just show up. Like, that's kind of operating under the assumption of like, you can just show up and take the same setup every day. Cannot do that. It's not gonna, you can't make money that way because it'll work. Like if you trade a 15-minute opening range breakout, works great in trend markets, and you get a range market and you get the pullback, stops you out 20 days in a row. And you wiped out the 4 trades that worked. So the context is really important. It's kind of just like round robining to all of your little strategies that you can make money on, depending on what's the best fit for the market right now based on your current read. It's a little puzzle. Okay, and you have all these little tools and you're like, what should I use today? Yeah, let's use the drill. Okay, today I need to use the wrench, no pun intended. Today I need, the hammer. Just because you switch from the wrench to the hammer doesn't mean you're making a big adjustment. It just means you're going back to what has worked in the market that's similar to this in the past. All right, minute 27 left here on this bar. All right, we got 35 seconds. If we can see a little bear bar closing like here, I can make sense of that. I'd sell the rollover and see if we can maintain this little trading range, and if we see a breakout, fine, I'll get stopped for like 18 points or whatever. But let's see if the bulls, I'm sorry, if the bears can make the bulls give this up. Otherwise, then we could be entering a little breakout stage, in which case I'd be looking to get long. But for me to pull the trigger on that, we would need to see a close. Yeah, we're not going to get that. A close above this wick. Okay, so same concept here now on this bar for both. Now, just speaking in context, if I were to get short right now, if the market told me that, and we got a pullback here, nice small, not big, small bear bar closing near its low, and I sell the rollover, that trade on average is going to take a lot less time because it would be much more of a scalp because we're in clearly a bigger bull move, right? That'd be much more of a scalp. And it would take a lot less time whether I get stopped or hit take profit. Here you can see we're getting some little algo wicks. Now, if we got a bull bar closing like up here and I got long, I could expect that that trade would take quite a bit longer on average. Doesn't mean it necessarily will. But on average, it's going to take longer, okay? Because I'd probably be looking for a bigger push upside, probably a bigger target. My risk would be a little bit higher on that trade, and the average trade duration, if I took that same trade 100 times, would be higher than the short scalp. So just to make that clear, hope that makes sense. So this bear bar, this is not a small bear bar, by the way. This is quite a large bear bar, reclaiming basically this entire range. Chris, big trade. Long since 21,960 in London session. There's one micro going to the moon. Yeah, I mean, Nasdaq at 1.5. You know, this is a bigger, I mean, you look here, so far on the daily, bottom of your screen there, obviously far right candle. It's a bigger body than we've seen in weeks. I'm very curious to see how we close today, though. How we close today will be meaningful for tomorrow, and pretty much all week. Because if we put in a nice big bull bar, like we close up near 22, 3, 22.4, or higher, it's a really big deal. But probability-wise, do we fade back down toward, the middle of the range that we've seen today at some point today? I mean, probably. That's what the probability says. So again, I'm not against getting short, but it would have to be a very, very clear confirmation for me as far as trying to time that. I'm not interested in guesswork as far as the timing in a big bull trend. been burned way, way too many times, just like everybody, taking that exact trade early on. Something a lot of you guys are probably doing that I'm just gonna like hopefully set you straight as soon as possible. If you see a move like this and you're just shorting whatever pop you look at because, you know, it has to pull back, right? This is way too high, man. It's got to pull back at some point. And then you're moving your stop losses. If you want to do that with really tight stops, when I say really tight, I'm talking like, you know, 20, 30, 40 point stops, not 4-point stops. And, you know, you're looking to get 200 points out of the trade. It's like, okay, that's fine. That's mathematically, that could check out if you get a low probability, really high reward to risk setup. Fine, but low probability. You're going to get stopped out most of the time. But I know a lot of you guys are probably doing the following. You're probably looking at pops in a move like this and saying, I can't go higher. There's no way. You're shorting them and you're using 10-point stops and 50-point targets or 20-point targets, and you're moving your stop loss. As it goes higher, you're moving your stop loss, moving your stop loss, moving your stop loss. Now your stop loss is 65 points. You move it again. Now it's 105 points. And then you just take it off because you're like, no way, it goes higher. And then you catch a 5% bull trend day because you had no risk management and the math stopped checking out after the first stop loss move, and you blow up. Don't do it. That's the hard way to make money. And I get it, it's tempting. Like there's something inside of us that says, man, I want to time this. I want to time the curl. Because that would be like that'd be a crazy trade, right? The goal here is to just try to make money, right? So take the quote unquote easy money trades. You're still going to lose a lot of them, right? But long term, it's the easier way to get edge. I know trading feels very like alone, like these mistakes you make, you're the only one who's made them, and it feels like, wow, that was really dumb, I shouldn't have done that. Or you're like, well, you know, if I just move my stop one more time, I can get away with this and then I'll never do it again. Listen, every mistake, guys, that you've made and are gonna make, I don't want this to sound like whatever, but I've been doing this for a decent amount of time now. Every mistake you make and will make, I have made a lot of times. And taken a lot of pain directly on the chin from doing that same exact dumb thing. Or even, you know, something you think is kind of smart that turns out to be not so smart. Just avoid it. I get it. We're all traders. We're all a certain personality type. You're probably gonna have to learn it on your own anyway. Fine. I can respect that because I was the same way. But just think about it. You know, if someone jumps out of the plane before you without a parachute, maybe learn from that. Gerald, we do. We do. When they're relevant. When they're not relevant, it's a waste of mental capital. I look at the highs of the previous day, the lows of the previous day, open, close. Tier 1 levels specifically, 22,000. You know, 20,000 was a big S tier level we were watching for a long time. Caught some great trades on hunting stops through 20,000 back when we were at 20,000. Just because I haven't talked about it in the last 60 minutes doesn't mean I just ignore them. But you know, that leads to questions that a lot of other people ask, like, hey, why don't you trade this setup? And it's like, okay, just because it's popular doesn't mean that everyone needs to do it or that it even works or that it's not missing something huge like context. Right? People say, well, why don't, you know, point of control, I see everyone trading that. Why don't you trade that? Because it's a substitute for what's real, which is price action. Yeah, C-Mac, we've all done it, my man. We've all been there. Don't do it. Everyone thinks that when they're telling themselves this, they're the first one. We've all done the same thing. We're not as different as you think. And it is a trap. Don't do it. You'll eventually have to grow out of that mentality anyway, so you might as well not start. I gotta tell you, I'm very interested to see how this bar closes, because this could be, if it closes just right, meaning it holds its structure, we don't give out through the bottom, because that would change things a lot. I'd actually be interested in buying the rollover of a bear bar closing near the low. Buying the rollover. Got 3 minutes till that rollover happens. I want to see how this bar closes. And we can finally put something on. I think initially I'd put my stop down here below this curl. And then if we happen to see a nice bear bar that closes near its low, well below the 20 EMA, I'd probably just manage early depending on how far away we are. But that all hinges on whether or not this turns into a bull bar, or maintains a bull bar, I suppose, or you know, closes near the low of what we were just seeing. That's the one thing with these tight little channels, is I don't like to do anything in the middle if I can help it. That middle probability just shifts really close to 50-50, and it's tough to make good decisions. We're getting some headlines, by the way, out of Trump. Kind of some foreshadowing for the G7 summit, which officially starts, though at least the official welcome is here at 11 o'clock Central. It's in 21 minutes. All right, we got 25 seconds here. See the 2 minutes starting to get kind of wicky, which is normal this time of day in this market lately. All right, I'll get ready here. Goodness, what an ugly close. Oh no! Good work, up 1,300 bucks in his Take Profit Pro. Man, if you're over the buffer, you can take your share of that very quickly. That's the beauty of the Take Profit Pros, is you can take the payouts really, really fast, pretty much daily. Which, by the way, Take Profit is 30% off, and they waive the activation fee if you use code BIG, B-I-G. Which, by the way, it always gives you the best deal at Apex and Take Profit. It's not only sometimes. You can just use it whenever. All right, market, we got about 2 minutes and 40 seconds left here on this bar. Man, these sideways wicks. Right here, you know, these can be tough. They start to tempt a downside push. But for me, it doesn't make sense to get short until we actually see that break. In which case, I would love to get short. But until then, I gotta say I'm more biased long. However, you get these wicks. The bulls are really, really struggling to even reclaim half of the existing channel. So, actually, I'm curious. In the chat, when I banned JR, who is the crypto pumper, does it show you guys that I banned him? Or does his message just delete? I don't know how it works. Oh, it just... Yeah, he was on borrowed time, man. Kings says, after taking a look at my journal, I get most of my wins post 1 p.m. to 2:30 p.m. Should I just avoid mornings altogether? You know, Kings, it depends on the sample size. If that sample size is like 200 trades, then at least in the current market environment, what I would think about doing is sizing down in the morning and taking full size that time of day. I wouldn't just avoid trading altogether because I think the reps are more important than anything. But yeah, I mean, listen, if you're somebody who's looking at your data and you're like, dude, you're calculating, you're like, my edge is like triple in the morning what it is in the afternoon, then size accordingly, right? Yeah, Joe, Discord, I don't know what Discord's doing, man. It's a huge problem. They, I don't know. I think it's a bunch of people. I don't think it's just one dude. I know who was actually doing it for a while. I don't know if it's still the same person or if it's a bunch of different people. But I know who at least was doing it for a little while. And what they do is they pretend to be me and they send friend requests. And if you accept them, the easy rule of thumb is I will never message you first on Discord. Ever. And they try to scam you out of crypto. And I don't deal in crypto. So, I mean, it's pretty easy to avoid. Just block them. But unfortunately, if they're still at it after all these years, it must be working. All right, 3 minutes, 10 seconds left here on this 5 minute. Again, I'm even as we're talking, I'm always watching pretty much every tick. Trying to find something that makes sense that we can put on here. Oh goodness, they don't even trade? I asked them how they feel about a 30% win rate with a 1-to-1 ratio, and he said it was pretty good. Oh, good lord. Yeah, I mean, you have to expect if they're scamming, they're likely not all that smart, huh? All right, we've got 1:10 left. Now, what I'm looking at here is if we can see a close, this would be a small little scalp, just taking a little stab to kind of break the ice. If we can see a close above like 22,204, which would also be near the high of this bull bar, I would get long and I'd put my stop right below this curl and see if we can get a push. Probably to about low 30s. Maybe take out some stops that have developed here. Let's see if we can get that. 25 seconds out. Come on, Bulls. Nothing. All right, hold off to the next bar. Yeah, Kings. You know what, guys? Listen, with like offers and stuff and services and whatever, first of all, the services they offer you are ridiculous. I mean, if you watch at all, if you hang out on the stream at all, you would know I wouldn't do. I don't even know what they offer. They change like all the time. I think it's like a, hey, copy my crypto trades. It's like I don't do either of those things. But you know, if you don't hear me talking about it ever, it's not real. Man, this sideways action is nuts. I think we're going to get a breakout here pretty soon. Then we can put something on. Yeah, Joe. So Joe says, do you actually offer any one-on-one sessions? I'm not taking anyone on that one right now. Anyone new, at least. But yeah, I have, and I work with them one-on-one. I for example, I have, you know, someone who I've been working with for a few months now, and they came in basically green, and they are doing really well. But I'm not taking anyone new on that right now. Soon, I think I'm going to have something that's a bit more affordable for people who are serious to check in with me. But again, I'm not taking anyone new on the high-level one-on-one thing right now. Okay, so we're finally getting that break downside. Let's see if we can break low. If we can get it closed beneath here, all of a sudden I'm really interested in getting short. $50 seconds here. Let's see what we can get. Yeah, Joe, the one-on-one, it's a really big commitment, and therefore it's a lot of money. And you know, it's a big commitment for me too, which is why I'm not taking anyone on right now on that one. But you know, I've realized that a lot of people, they just need like that little personal touch. It's not even like a ton of time. It's not really a big commitment. It's a lot more affordable. And I think for a lot of people that could help them turn the corner just like a little bit. They could, you know, check in with me once every 2 weeks and I hit you back with a voice message and just straighten the last couple things out and get you on your way. And I think that would be really, really helpful for a lot of people who are like just barely not turning the corner. So I'm gonna be working that out pretty soon here, I think. Okay, let's see this next bar develop. If we can get a nice push lower. Yeah, so okay, these next 4 minutes are really, really important to me. If this bear bar ends up falling through and closing like here, I'm selling short and getting short. Maybe take out a few stops here. Maybe look to get a bit lower. I'd probably risk, depending on how big this bar would be, I'd probably end up risking this curl here. Let's see how this develops. Now again, that rollover will be noon Eastern time. So I'd probably give it maybe 5 seconds on the rollover, see if there's a lot of volatility, and if there's not, there you go. There's the follow through. Let's see how this closes. Yeah, alert a fuse like that, exactly. All right, Bears, come on now. You can see they're getting wicked up by the bulls. The bulls are remembering, hey, you know, range market. That's why it's so important to understand the context. If you're in a trend market, a lot of times you'll get this push, you get less of a trading range, and then sometimes you can get a smaller trading range, and then all of a sudden it commits to a downside push. When you get stuff like this, most breakouts, you're going to at least see an argument from the other side. Like up here, bull breakout, argument from the other side brings it back into the range. Bear breakout, argument from the other side, and let's see if they bring it back into the range. If they can't, and this closes nice and low, I'll sell the rollover. That's 65 seconds out. Let's see if that happens. Trading range, Just got to remember, trading range, right? Unless something tells you otherwise. Gotta assume trading range. Bulls step in, wick that baby back up. Tiny little bare body. All right, I'll be back in 2 minutes. All right, we are back. All right, got my eye on the 5-minute chart, top left. There's a minute 30 left here on this bar. Okay, now a 50% retracement here. So far on the day. Would be pretty much here-ish. I'm sorry, here-ish. So I'm okay with that. I'd be willing to front run that a little bit. 65 seconds out. See how this bar closes. Goodness, man, it's pretty well balanced right now, isn't it? We're getting a lot of little wicks. All these breakouts are essentially failing, which is kind of forcing my hand as far as scalping mentality inside of this little range. This here makes it tough. This makes it tough because the bulls for this period of time were a little bit outnumbered. Couldn't even get it back to really half of this range. I mean, about half tops. And now we're getting some consecutive, yeah, shrinking bodies, but consecutive bear bars. Now, if these bear bars were larger, probability for a move lower is higher. But I mean, still, I've got my eye on 22,155. A close beneath there, and I'd be happy to sell that rollover. And even if you look at this as a descending support, descending resistance, if I risked this curl here, any break of this high would already be a break of the descending resistance, so that would shoot my idea in the foot regardless. So I think that'd be where it would make most sense to place my risk on that trade. If I can get a close beneath here, within reason, right, and sell the rollover. So, all right, guys, that's what I'm looking at. Kind of a slower start to the week. Again, we got that nice push off the open. If we look, you know, these bars were, in hindsight, they were okay. You could have bought basically the rollover of any of them and made money at some point. The problem is managing them. You're getting these big wicks back. In real time, it's kind of a tough look. It's not very clean. Then we entered this trading range. We talked about that. Hey, we're probably going to enter a trading range. I think we started talking about that, like, here. And look, that's exactly what we did, right? Very, very common. We're seeing that a lot lately. So now I'm very interested in again, getting short if the market presents itself in that light. So, all right, guys. Well, I'll tell you what. This is the roster I'm currently running. Take profit, by the way. Again, the big thing over there is daily payouts, and they're in your bank account very, very fast. Whereas, obviously, with Apex, you got to wait 8 days, but you can scale Apex to 20 accounts. Take profit, you can only scale to 5 total, maxed out. So take profit though, no activation fee, which is a really big deal, and then you also get an additional 30% off the test, which is, you know, not nothing, right? So that is actually a very good deal at take profit without the activation fee. So when you pass, you pay nothing. Whereas if you don't use the code, you have to pay over $100 just to activate the account, which kind of sucks. So use code BIG at take profit. Obviously, Apex right now is 80% off still. You can pass in 1 day. You don't have to, but you can. Which is obviously a great deal. Best deal always at Apex with code BIG, baby. All right, guys. I will see you tomorrow, 8:15, while around market open, Central Time. Well, I guess market open all over the world for the New York session. Hope you guys have a great rest of your day. I'm going to hit some lunch, and then I will come back and sit down and see if the afternoon gives us anything a little bit more definitive here and try to get some work done here on the day. All right, guys. See you tomorrow. Have a good one. Stay smart. Let it come to you. And when it's time to hit it, hit it.